Welcome to the program Business Point here on Global Television. I am Samuel Odi. Many thanks for joining on today's edition of the program. Exciting news in the business world, which is not something we get to see on a weekly basis, but it's very interesting and exciting to see this level of bullish run all through the previous week. Let me bring you up to speed. Best performing Nigerian stock for the week ended October 10th, 2025. The Nigerian All-Share Index closed the trading weekend October 10th, 2025, firmly in the green zone, surging by 3,404.00 points. This marks a 2.37% weekly gain as the index jumped from 143,584.04 to 146,988.04, driven largely by strong performance in the heavyweight stocks such as Dangote Cement, gaining over 9%. Despite this upbeat momentum, overall market volume dipped slightly, sliding from 2.9 billion to 2.2 billion shares, even as trading activities remained robust. Meanwhile, market capitalization mirrored the price gains, rising to 93.2 trillion naira across 138,177 deals, compared to 91.13 trillion naira recorded in the previous week. Market breadth also showed improvement. 51 equities appreciated in price, slightly lower than 53 in the previous week. 41 equities declined compared to 43 from the previous week, while 55 remained unchanged on a month-to-month basis. The index had advanced by 3.00%, bringing its year-to-date performance to a strong 42.81%. Market overview showed that the Nigerian All-Share Index closed every trading day of the previous week in a positive terrain, sustaining a strong bullish momentum. The rally kicked off on Monday with the index advancing by 1,238.7 points, and the gains continued steadily throughout the week. A final 783.7 points surged on Friday, capped off the rally, popping the index above 146,000 mark to close as a new high of 146,988. And this is how the market is opening today, Monday, a new business week. The market is opening, the All-Share Index market is opening at 146,988. And investors, and also the reason why we saw all of this, that investors have improved or increased their having Sincerely apologize for that quick break we had to take. So as I was saying before the break, but if you're joining us, this is still Business Point here on Global Television, and I am Samuel Odi. So in the previous trading section of the week, we saw lots of improvements and we saw a trajectory for the whole 5 trading business days. We saw the Nigerian All-Share Index gaining momentum on a daily basis. We saw a bullish trend all through the week, and also that momentum had continued today. That's why the market also opened at 146,988 points, and we are looking, and projections have actually said, and policies, and also experts have actually projected that before the close of business this week, we're expected to see the Nigerian All-Share Index points amounting to around 150 points. That if this bullish trend continues throughout this business week. We'll definitely stay in touch and also follow tabs of the happenings and the change in the market, and also bring you those updates. So moving on, interestingly and also excitingly, Nigerians 6.92 trillion naira equity deal, highest in 13 years. The value of equity traded on the Nigerian exchange jumped to 6.92 trillion naira in the first 8 months of 2025, the highest in 18 years, which is an improvement over almost 2 decades. We've now recorded this significant growth in the Nigerian exchange market. The figure more than doubles more by 3.47 trillion reported for the entire year of 2024, reflecting raising investors' confidence in the local bureaus. Out of the 6.92 trillion deal, I'll bring you more highlights or talking points around these figures immediately after this break. Stay with us. It's in the Apple. Yes, many thanks for staying with us. We again sincerely apologize. Moving on, the figure earlier around the Nigerian exchange hit 6.9 trillion naira, and then this figure doubled more than what it was from 2024. All of this reflects raising investors' confidence in the local bureaus. Out of the 6.92 trillion deal, foreign investors accounted for 1.45 trillion naira, representing 21.01%, while domestic counterparts demonstrated with 5.46 trillion on, or you can actually level this at 78.99%. Month on month, the report shows that in January 2025, the total value of trade equity stood at 607.05 billion naira. February showed 509.47 billion. In March, we saw 115 trillion naira. In April, we saw 486.04 billion. In May, we saw 700.50 billion naira. June also recorded around 778.65 billion naira. In the month of July, the record report showed a 1.815 trillion naira, and August recorded 908.38 billion naira. It's imperative to note that the surge in primary market activities, as well as validating the broad improvement in liquidity across the capital markets. Interestingly, domestic investors accounted for over 3/4 of the trading activities and more. Importantly, retail investors accounted for 1/3 of the market liquidity, highlighting the renewed appetite of investors for stocks. So this has shown very interesting activities going on in the Nigerian equity deals, and this has recorded the highest in the past 18 years, which shows that the policies by the financial sector in Nigeria is working, and then investors are having confidence that the Nigerian market is stable. But there's another concerning thing that policymakers have said, and financial experts have actually complained about the fact that we get to see this trajectory towards the end of the year. That's the growth and all of this interesting reports coming up. But afterwards, what then happened during the other months where you get to see a dip in all of these reports? Now, transparency and also inclusiveness in boosting local production and also having availability for low earners, that's talking about small, medium enterprises, small businesses like those in the market, is actually going to create more avenue for Nigerian economy to keep seeing this significant boost in the financial sector. The president is looking towards to improving Nigeria's GDP to around 1 trillion naira, and with this trajectory we've seen from the past 8 months of the year 2025, it's interesting, and Nigeria's GDP and economy is heading and tilting towards that direction where Mr. President says he's looking to improving Nigeria's economy and making it a 1 trillion naira economy before 2030. So we are going to see how all of this pans out. So we'll be moving away from the stock market and moving straight into oil, as Nigerians oil holds 67 dollar to a barrel as the US-China tension eases. And Donald Trump made a comment in line with this, but we'll get right to that quickly. Nigerian crude settled near $67 to a barrel as oil buyers returned to the depressed energy market. Oil price rallied strongly during the first trading section of the week after steep declines last Friday. Nigerian bond light held firm at $67 mark, while major oil blends such as Brent crude also gained strongly. Investors have become cautiously optimistic that potential negotiation between President Trump and Xi could ease tension between the world's two largest economies. In his speech talking about President Donald Trump, he wrote on his Truth social media that the US wants to help China, not to hurt it, and that the Chinese economy will be fine. However, on Sunday, Trump threatened to impose a 100% tariff on China's imports, saying there was no need to meet with Chinese President Xi Jinping at the upcoming summit in South Korea. In response, China warned it would retaliate if Trump did not withdraw his pledge to impose the tariffs. Brent crude traded at $63.76, while WTI crude rose by 2% to trade at $59.92. This recovery followed a more than 4% drop in oil price as at Friday, which brought them to their lowest levels since early May. Nigeria's oil industry soars with first local-owned floating vessel. Nigeria has launched its first fully owned floating storage and offloading vessel near the Bonny Export Terminal as Africa's top oil producers aims to modernize its crude export infrastructure. The FSO, with a capacity of 2.2 million barrels, is located in the eastern Niger Delta and designed to enhance crude oil production and transportation from oil mining lease 18 and nearby assets. It will also expect to reduce reliance on pipelines and minimizing the risks of oil theft and vandalism, which has been a major concern here in Nigeria, oil vandalism and pipeline concerns. So with this now, we are hoping to see that all of these would all cushion the effect that we are witnessing in those sectors. Now, talking about China and America, these are the two world powerhouse when it comes to economy. And whatever decision that is being taken by these two countries now tend to boil down to every part of the world. And the part of the world mostly that gets hit the most is Africa. And now, how can Africa now navigate from all of this, back and forth trade war going on? Sometimes it will look as if there is peace between Donald Trump and the Chinese people, and sometimes it will look as if there is no peace. Now, if this 100% tariff gets imposed on China, is definitely going to triple down to Nigeria and Africa at large because of those who do businesses with these countries. And there will definitely be an increment in the prices of whatever it is that importers get to import into the country from all of these countries. So looking at it from those angles now, basically, this tariff now is something that is definitely not just going to affect China, but it's also going to affect the world at large. So hopefully this 100% tariff imposement will not be done by President Donald Trump. So moving on, Nigeria's public debt hits 152.4 trillion by June 2025. The Nigerian's total public debt has climbed to 152.4 trillion as of June 30th, 2025, up from 149.39 trillion at the end of March. This is according to the latest figure from the Debt Management Office. The figure represents a quarterly increase of 3.01 trillion, equivalent to 2.01%, while the dollar terms, the debt stock rose from $97.24 billion to $99.66 billion, reflecting a 2.49% increase. Now let's look at it segmentally. External debt portfolio sees modest interest. The Nigerians' external debt stood at $46.98 billion, which is around 71.85 trillion Nigerian naira in June, up from $45.98 billion, which was approximately around 70.63 trillion naira in the month of March. The Debt Management Office report shows that multilateral lenders remain the largest creditors with a combined exposure of 23.19 billion, accounting for 49.4% of external obligation. The World Bank, through the International Development Association, is the single largest creditor with $18.04 billion outstanding. Bilateral loans made up for $6.20 billion, led by the Export-Import Bank of China at $4.91 billion, followed by smaller exposure of France, Japan, India, and Germany. Commercial borrowing remained still sizable at $17.32 billion, almost entirely Eurobonds, which accounts for 36.9% of the external portfolio. A further $268.9 million was owed under the syndicate facility and commercial banks loans. The resilience on Eurobonds and other commercial instruments exposed Nigeria to the global market versatility, while the heavy construction in multilateral loans indicates continued dependency on concessional financing, which is a very, very big concern. Still looking at it from the domestic debt dominated by long-term bonds. Now, this is another segment of where all of these monies are being, going into, and how much each segment or how much each department is taking. On the domestic side, total obligation reached around 80.55 trillion naira by the month of June, an increase of 1.79 trillion from 78.96 trillion in March. Federal government bonds dominated the portfolio with 60.65 trillion naira, representing 79% domestic debt. This category includes 36.52 trillion in naira denominated bonds, 22.72 trillion naira in securities ways and means advance, and 1.40 trillion naira in dollar bonds. All of this has been a concern, while treasury bills accounted for 12.76 trillion naira or 16.7%, while Sukuk issued stood at 1.29 trillion naira. Smaller instruments include saving bonds worth 91.53 billion, green bonds of 62.36 billion naira. Prominently noted, totaling 1.73 trillion naira. The promiscuous notes include both naira and foreign currency dominated liabilities converted at the June central bank exchange rate. Looked at how all of these concerns kept growing, but the growing continues as the stock of securities ways and means advanced, underlying the facial stress the government faces even as it leans on bond market to finance budget deficits. Now, that's on the side of the local domination, and looking at it from the federal government account, the federal government account for over 92% of the 152.40 trillion naira debt stock, and the federal government was responsible for 141.08 trillion naira, which amounts to 92.6 of the total. This was made up of 64.49 trillion naira in the external obligation and 76.59 trillion naira in domestic debt. For the first time in 2025, the Debt Management Office provided a separate breakdown of external debt for states and federal capital territory. Their combined obligations were reported at $4.81 billion, which accounts for around 7.36 trillion naira, while their domestic debt stood at 3.96 trillion in total. Subnational government owed it at 11.32 trillion naira, accounting for 7.4% of the national debt stock. Nigeria is indebted big time. So we are hoping that with this recent trajectory that we are seeing in the Nigerian O-Share Index, that money being saved from subsidy would be able to go into all of these sectors and, cushion and pay off more of this debt that we are actually seeing. This is the first time that the Debt Management Office is actually segmenting and breaking down how much Nigeria is owed by the federal government, the states, and also monies that have been going into treasury bills and euro bonds as well. So we'll see how all of these pans out. So moving on now, before we wrap up today's edition of Business Point, Central Bank of Nigeria releases new guidelines for instant refund for failed ATM transactions. The Central Bank of Nigeria has introduced the new draft guidelines compelling banks to provide instant refund for failed automated teller machine transactions. The rules are released on just this past weekend are designed to strengthen consumer protection, improve service reliability, and ensure greater accountability in Nigeria's financial system. The circular, signed by Musa I. Jimo, Director of Payments System Policy Department, was addressed to banks, payment service providers, card schemes, and independent ATM deployers. Stakeholders have until October the 31st, 2025 to provide feedback before the guidelines are finalized. So on a lighter note, all of your ATM transactions that get to fail, you might not need to go and wait for probably 5 or 3 working days before you get your refund. From what we're seeing now, the Central Bank of Nigeria is saying that instantly banks are meant to refund you any failed transaction if you get debited. And also, the federal government have also said that the Minister of Finance, Wale Edun, would not be replaced based on the fact that he is having some health challenge, and the federal government has nominated the Central Bank of Nigerian Governor, Cardoso, to go represent in the summit that will be happening in Washington, D.C. And we wish the Minister of Finance, Wale Edun, a quick recovery as he is seriously ill. And this is how much time will permit us to take on today's edition of Business Point. My name is Samuel Odi, sitting in for Kike Lomo Okeri. In her words, I celebrate you all. Bye for now.